And if you want to lower your premium down the road, lower it down the road. But that's not what happens most of the time. People increase it. But it was just crazy because I heard that, and then I heard her say, well, I'm a little worried because I don't want to lose, I don't want to lose any money. And I'm thinking to myself, I almost wanted to come in there and get in front of the camera and say, this is the only thing that I know about that you actually put money into, and you cannot lose money, because exactly what you said, there's a guaranteed contractual growth rate. Even if the company never paid a dividend again, you cannot lose money. And I just wanted to say, well, tell me what other vehicle that is out there that you can put money into and never not lose it. I mean, what is there? This is the only thing, right?
Hello, Money Multipliers. Welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kesler, and we ask ourselves, do our dollars make sense? Today, if you are watching from YouTube, you can see that we are in a new location, and I am joined by the one and only Mr. Brent Kesler. Yay! You're a hard man to pin down, my friend.
No, not that hard.
We spent the 4th of July up here, so Mom and Dad like to spend their summer months up here at the Lake of the Ozarks. It's right in between Kansas City, St. Louis, and I grew up coming here to the lake, but this is really, I would say, our first year that we're at the new house, like fully moved in.
Yeah. Yeah, it is the first full summer, absolutely.
So no, it was fun. We had a great firework display just right across the cove, and
just right across there.
It got kind of crazy. The weather did for a little bit. They're calling it the Ozarks hurricane that happened
Saturday.
on the 4th. Yeah.
July 4th.
Yeah, that was a little
Lost
nutty.
our power for 7.5 hours.
Yeah. The neighbor had to go and buy a generator because we just had to have our homemade ice cream and fried chicken.
Well, yeah, so the neighbors were making fried chicken and homemade ice cream, and they were making it all on an electric grill, and then I guess you have to have electricity to run your homemade ice cream maker too, so they had to go and drive an hour away to find a generator on the 4th of July so they could have their party.
Yeah. No, so we had a good time, and I know this is coming later on in July, so hopefully y'all are having a wonderful summer. This is where we like to spend our summer months. And really, for today's topic, how couples can get on the same page and finally stop bickering and arguing about money. It's a true thing that happens with couples when you're in marriages.
Yeah.
And I thought it would be a great episode to bring Pops on because you and Mom have now been married for 30 years, is it?
Correct.
30 years. 30 years on May
2nd.
2nd. I was going to say May 1st,
Yeah.
May 2nd. So
30 years and 2 months.
30 years and 2 months. So I want to ask you, because honestly, Dad, when I was growing up as a kid, you were a chiropractor for a long time. And that was my first ever job when I was 14, was working the front desk, the CA at one of your clinics.
Yep, chiropractic assistant.
And Mom was running the billing department. She was doing billing for your offices and then some other chiros. And y'all did have some times where you were not on the same page with each other about your money. Would you be open to sharing a little bit about the past and how did y'all start to get on the same page?
Well, yeah, so I was a spender, I mean, I would make money, but I would spend money too. So, so there was lots of discussions where we weren't on the same page about money, things that maybe I wanted and, she didn't think it was a good idea. So, and again, I don't know how far you want me to go back, but so I guess I'll go back to where, the whole infinite banking concept came into play, right? So anyway, I just had gone and I watched this presentation, on the infinite banking concept, how to become your own banker, and I thought it was really, really cool, but I thought it was too good to be true, and, I didn't believe it, right? And then I went and got the book. I read the whole book, the Nelson Nash book, and I saw a couple of my um, probably a half a dozen or more of my other colleagues that started this concept previously, and it was working in their life. They were paying off their debt, recapturing, recycling money. So I knew that Mom and I, had quite a bit of debt. It was both good debt and bad debt, but it was, yeah. So anyway, it was still debt, yeah. So
How did Mom want to originally pay it off? Just the traditional way?
yeah, just a traditional way. And I said, hey, the thing, let's put our money here and then pay off our debt. And I really didn't even understand what it was all about at the time. And Mom was like, what? We're going to put money in a whole life insurance policy. We owe all this money to other people. That's the last thing we want to do, is put money into a policy. But then after, we kind of just talked about it, had some discussions about it. I'll just say we had discussions about it. Yeah, we definitely argued about it. And the thing I think that Mom finally said, it's a way for us to save. After she researched it a little bit, she looked at it like it was forced savings. So it was going to force us to save money by putting money into this policy. And a lot of people, even today, that's what they look at it as. They look at it as it's forced savings. So because you have to put your money in here first, and then you spend it after that, or pay off debts or expenses. So that's really, just how we started, not even really knowing how it was going to work, other than having my colleagues and other people that I knew that were doing it now for a little bit, and it was working for them. So we started our first policy back in 2008. So going on close to 20 years now, 18 plus years. It was early 2008. And then we started one policy, got another policy, and all the cash value in the policy, we used it to pay off the debt. And I'm sure the majority of you guys know my story. Paid off $984,711 in third-party debt in 39 months. In 3 years and 3 months, where it would have taken us well over 15 plus years to doing it the traditional way. And also, we would have lost all of that growth. We would have lost all of that, uninterrupted compound growth. Because if you take your money and you just go pay off something, or you buy something and you don't run it through the policy, well, what happens to that money? It leaves your family.
Forever.
It's gone forever. So the very least you can do for yourself and for your family is to put the money in the policy first. Just put it in there first, and then utilize it out of the policy. Then you take a loan, from the general fund of the insurance company. So now at least your money is compounding and growing, and you're using it at the same time. Had I just gone and paying off the debt, or just like paying it down, sure, I could have probably paid it off in a little less time.
But then you would have lost all the opportunity cost.
All the opportunity cost, all of the growth inside of the policy. We would have never had the death benefit. And I know the death benefit is not the main reason that we do this, but it's a pretty
important.
It's a pretty big deal.
Yeah.
I mean, it's because you never know when the time is going to happen. We were just talking to your friend Sadie. And this weekend there was a big storm here. Right on Saturday the 4th, there was a big storm on the lake. I mean, it was just like a quick storm that came out of nowhere, and it was a lot of wind and a lot of waves on the lake. And we were talking to Sadie this morning, and her cousin that lives in Kansas City, in the Kansas City area, is down here. And so anyway, her cousin had 3 friends, all in their mid-20s, and they all died on the lake because their boat capsized, right?
Yeah.
Capsized. Right, just 10 minutes ago, she was telling us that story.
Yeah.
The boat capsized, and all 3 of them died. I don't know how. We don't know the details. But I imagine what happened. The boat turned over. They got caught underneath the boat, couldn't get out from underneath the boat, and they drowned. But I don't know the details yet. But so the point being is that you never know, what can happen, and you never know how old that you're going to be. Yeah, I know they're in their mid-20s. The last thing in the world they were thinking about was
dying,
dying or death benefit or their families. But Look, everybody, no matter if you use this for your banking policies or not, or whatever you're going to do, you never know, and you want to have some, just the thing, you want to have death
Security.
benefit and security on every member of the family, no matter how old,
Yeah.
But now we get the best of both worlds. You get the policy, you get the death benefit, and you get the cash value
You can use it.
of the policy. Yeah, because
How?
again, right? So, okay, so these kids, okay, we're practically your age. How old are you?
26.
26.
Mm-hmm.
So they were like 25, 24, 26, whatever it was.
I know.
And so how many policies do you have? How
I
much
have
death?
8 policies.
And right, you have death benefit.
I don't even
you
know
know.
how much death benefit at this point, because
Right.
it continues to increase when you're with a mutually owned insurance company because of those dividends that we receive, and you continue to pay paid up edition premium. That's the death benefit continuing to increase as time goes on. Thus, the point two, hedging against inflation.
Right.
That's something else that you always want to look at when you're dealing with your money and your finances. But you also made a comment, like I remember growing up too, that it took mom even a long time to get on board with this. Because mom is, we've talked about her on the pod, she's a nuclear engineer. She's very, very analytical. She's the type of person, you'll sit her in her room all by herself. She'll break apart a computer and then put it all back together just so she understands how it works. So that's why when I was growing up, we'd come to dad, and dad would always say yes if I wanted to go have a sleepover at a friend's house, and then I would never ask mom because it would take mom about 7 business days to get back to you on her decision.
Still to this day, it takes several business days.
Hey, sorry to interrupt the episode here, but I want to take a quick break. If what you're hearing today has made you curious about infinite banking, how it works, I want you to go watch my free presentation. In it, I walk you through the same steps that my family took to pay off $984,000 of debt in 39 months, and how we've been able to recycle and recapture every single dollar since then. This isn't theory. This is real. I mean, this is what the wealthy have been using over 200 years to keep the money within the family. This is literally where banks, conventional banks, store a boatload of their dollars at. And it's the same process that we've helped thousands of families across the country put into action. So go to themoneymultiplier.com/presentation and see for yourself how you can start taking control of your money today. All right, let's get back into the episode. But with mom, so she was not totally on board, but she allowed you to do it because you were a spender in the relationship, where mom was more of a saver. And so she looked at this as, okay, instead of Brent spending his money on stupid shit, he's going to force himself to save inside of this policy. Even after that, though, mom was still not fully I don't want to say engaged. She was engaged, but she just wasn't fully on board quite yet because she didn't understand all of the ins and outs. But then she got to the point where she did understand, that she even went in and cashed out her old 401k.
Yeah. And two, probably a big reason that she wasn't on board is because of her, probably because of the way she was raised. Her upbringing was very traditional. 401ks, IRAs, qualified plans, right? Let the government, just take control and stuff, because her father, to this day, at night, he just turned 92 years old, a couple weeks ago. And again, he still has his account at Edward Jones, right? He still has he has an account at Edward Jones. He has an account with, I think it's called RBC Wealth, right? So he's still in that game, very traditional mindset. And, that's just the way that mom was brought up. She wasn't brought up to really think outside of the box at all. Everything was, just all traditional. So, and it just took her quite a while to get out of her shell, to get out of that comfort zone to what she was comfortable with and what she did and what she was raised on. So again, the thing is that you have to be willing to, explore other opportunities, other options. I always say the thing is to watch what the masses of people are doing, and then you go do the opposite. Go do the opposite of what the masses of people are doing. Now, I'm not saying just to go out there and do it just because somebody tells you to do it. Go do your research. Go look, to see what's going on and how this concept works. And I heard you doing a call earlier today. You were doing a call, and I don't even know if you knew that I heard you doing the call, but I heard you on the Zoom call, and I heard the person asking you, and I think this was somebody you've already talked to that's already went and they've looked at stuff, and they're already approved. But I could hear, but anyway, on the call I could hear her saying, well, we're just a little afraid. We don't want to put our money in this and lose all of our money. And I'm just thinking to myself, if you only knew this is the only thing you can put your money into and not lose it, and right, because all that other crap out there, all that traditional stuff, you have the risk of loss.
It's an investment. It's an investment in those other accounts.
Right.
And how I answered the question to her, or how I responded, is I said, look, at the end of the day, it's a whole life insurance contract. It's really not that complicated. It's a whole life contract, and you are walking into this contractual agreement with the insurance company saying, hey, I'm going to pay you these premiums. I'm going to pay you these premiums in exchange for me paying you my premiums. You are guaranteeing me a contractual guaranteed interest rate on my cash value in the policy, and you're contractually guaranteeing me this death benefit when I pass away, not an if. That's all that it is. The only thing that we're doing different is how we're internally designing it to have immediate access to the cash value. And for my IBC vets, y'all know that as paid up edition premium, having more of our premium, the majority of it going towards those paid up editions or PUA riders. And that's what allows us to have the cash value made available to us. But look right here, and that's what we did today, because she's approved for her policy. We're walking through that second strategy call together before she signed or accepted her policy, so she can really understand the numbers and what we're going to do once the policy goes in force. And I said, look, right here on this policy illustration, you can see the guaranteed side. This is the worst thing that is ever going to happen inside of the policy, and the guaranteed side only goes up. It can never go down. It can only go up because there's that contractual guaranteed interest that the insurance company has to pay me. So the worst thing that could ever happen is we just don't get a dividend. It hasn't happened in the last 120 plus consecutive years with the 6 companies that we do business with. But hey, it could happen. I can't sit here and promise you that you are forever and always going to get a dividend. But it's so simple that I think with a lot of the products and a lot of the financial advisors and their philosophies, along with going down the rabbit holes of YouTube University, that people get confused, they get lost, and then they just don't know what to do because they have this paralysis by analysis. You see that a lot with clients, right?
Yeah, absolutely. They try to overanalyze everything, and they try to put more into it than what is really there. There's not a lot to it. There's just, there's not. Just decide the premium that you want to put into your policy, and then just go with it. And if you want to lower your premium down the road, lower it down the road. But that's not what happens most of the time. People increase it. But it was just crazy because I heard that, and then I heard her say, well, I'm a little worried because I don't want to lose, I don't want to lose any money. And I'm thinking to myself, I almost wanted to come in there and get in front of the camera and say, this is the only thing that I know about that you actually put money into, and you cannot lose money, because exactly what you said, there's a guaranteed contractual growth rate. Even if the company never paid a dividend again, you cannot lose money. And I just wanted to say, well, tell me what other vehicle that is out there that you can put money into and never not lose it. What is there? This is the only thing, right? So if you're not doing this, then what else are you doing? What other safest, place? Is there a safer place?
People are probably thinking, well, I could just keep my money in the bank, or I could have a CD.
Well, that's not even safe.
I know.
You know, because you can lose your money in a bank.
Yep.
You could. I mean,
if
bank
you really think your
does
money's
not
backed up by the
guarantee-
FDIC.
Yeah, that's bullcrap, right? You go try to just make a run on the bank when everybody else is trying to make a run on the bank at the same time and see how much money that you get. You know, people say, well, I'm just going to keep it. You know, like there's one guy down in Florida, Bobby.
Oh yeah,
He just keeps cash.
Cash?
He says, I'm going to keep all cash.
Yep.
I'm keeping all cash. Well, Bobby, you better hope your house doesn't catch on fire.
Yeah.
Right?
Go read your book, Mapping Out the Millionaire Mystery.
And then cash. I mean, what are you going to do with just a stockpile of cash? You know, a stockpile of cash. How are you going to just take that stockpile of cash and use it to make any major purchases? So if you want to buy a house, you think you can just walk down, you know, and take a stockpile of cash and pay with a stockpile of cash and buy your house? Go try doing that. Go call up the go call up the title company, your banker, the real estate agent, whatever, and say, hey, I'm coming to closing with a stockpile of cash. You know, how's that going to work?
Yeah.
No, it's not going to. They're not going to allow you to come to closing with a stockpile of cash. If I'm wrong and you know that I'm wrong, text me and tell me how I'm wrong. But you can't do it. I was going to even do it one time because I had all this money that I was like, you know, I don't want to screw with the bank and use it. This was years and years ago, and I was going to just take cash to the closing. And the real estate, his name was Tim. Tim and his wife Gina. They were husband and wife real estate agents in Clearwater, Florida. And they're like, no, you can't bring cash. You can't bring cash to a closing. I did not know at that time you couldn't bring cash to a closing.
Yeah. Yeah.
That's how I learned you couldn't bring cash to a closing. You know, like when you think about it, it makes sense because, you know, all that money has to run through the banking system.
Yeah.
I mean, even if you go deposit cash, if it's over $10,000, they're like, where's it coming from? They
Yeah.
make you fill out paperwork.
Yeah.
If you're depositing more than $10,000 in cash. If you try to withdraw more than $10,000 in cash, they usually don't even have it. You got to make an appointment to come back and get it.
Did I tell you that story? I was at the bank one time and I was doing a wire transfer for this investment that I was doing, and a guy walks in and he tries to withdraw. It was like right around $15,000 from his checking account, and they didn't have the money. They said, hey, well, can you come back in 2 to 3 days and then we'll have your money? And he was mad. He was screaming up there in that Wells Fargo. He was pissed, you know? He's like, what do you mean you don't got my money? I got to come back for it?
Yeah, exactly. But I don't know how we got off on this tangent, but
hey,
yeah, it's.
But back on my topic of couples and money. So here's my biggest advice, because obviously, right, I'm a single girl. I've had relationships in my life, but I'm not married. The only person in my siblings, I got 2 brothers that's married, is my older brother, Sean. Zach's not married. And so how do we get on the same page with our spouse is my question. What I can think of is, hey, think of this as a framework for us to be on the same page together. How can we walk into this for both of us to maybe come to the table? Okay, you're going to do 500, I'm going to do 500, and let's just start contributing $1,000 a month to this policy, and let's just see what happens and how we like it. What would be kind of like your first advice to get on the same page? And like, what did you and Mom experience?
Well, yeah, I think it's just to get on the same page. I think it's important that you both just have an idea of what's going on and how it works. What we find a lot is that couples do not so like as far as if you take an example of a couple, it's either the husband's on board or the wife is on board and the other spouse is not. They just haven't taken an interest in this, and they're just thinking, oh, there's no way that could possibly work because that's not what everybody else is doing. You know, or they're talking to their friends, family, colleagues, co-workers. What? You're going to put money in a life insurance? That's the worst thing you can do. Dave Ramsey and Susie Orman says that totally sucks. You never want to do that, right? So have an open mind and just have your spouse, have the spouses, you know, get together and take a look at this process and what exactly is going on. Because if it's important enough to one spouse, the other spouse
It
should
should
have
be.
a little bit of an open mind. Even if they don't have an open mind, they should at least want to listen. And then if for some reason you both can't get on board, then just start with the very, very smallest amount possible and just do one. You don't have to do two, right? Just do one and just say, okay, honey, let's just start this. I want to do this. Worst case scenario is my cash value is going to grow. That's the worst thing that can happen. Worst thing can happen is you can put money into a policy and it's going to grow. So that would be the worst thing that's going to happen, is it's going to grow, because you're not going to lose money. So even if we get in it and we don't like it, the worst thing that's going to happen is it's going to grow by more than what we're putting into it.
Yeah.
Right? I mean, so that's the worst thing that can happen. And then just start very small. You know, don't look at 1,000 a month like you said. Look at 100 a month, or 500 a month, or $250 a month, whatever. Start very, very small, and then just start utilizing it for the small things in life. Just start utilizing and see how it works. Okay, so so the thing you're gonna do, pay your policy premium. Then about a month later, take out your policy loan. Oh, really? You get a loan? Yeah, we got the loan. The insurance company sent the money. Now take that money and go pay off something. Pay off a bill, pay off a debt, pay down something.
Use
You don't
it
have
to
to
pay your
it
property
off.
taxes.
Whatever
each
it
year.
is, just pay something off. And then get with somebody on the implementation team and have them map out this very small amount that you're going to do and say, oh, okay, well, you took this, you paid your taxes with it, or you paid part of your taxes with it. Now, let's pay ourselves back with interest, just like you would have to do if you went and borrowed money from a bank. Let's treat our money the same way we treat a bank's money. And now let's do this. And we're continuing to make our deposits. We're continuing to pay ourselves first, right? We always want to pay ourselves first. And then go tackle the next debt or the next expense.
Yeah.
There's no way for this not to work. The only way this fails is if you screw it up. That's the only way it fails.
Yeah.
You are the ones that are going to screw this up. It doesn't fail unless you screw it up. And the only way that you screw it up is if you steal from yourself. You don't play honest banker with yourself. You're the only one. You know all of the rules. You know everything you can do and you can't do. And honestly, there's nothing that you really can't do. I mean, if you want to just go in and you want to pay very little premium, and you want to pay it one time only, and you want to suck every dollar out, never pay any more premium into the policy, never pay back yourself, then yeah, you're screwing it up. But the same thing would happen if you did that to a credit card that you had. If you go out and say, oh, let me suck out all of my credit availability and never pay anything back, what are you going to do? You're going to screw it up. They're going to take away your credit card, right? So you're the only one that can screw this up. It is very, 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 very hard to mess this up. Even if you think you mess this up, and even if you don't do the stuff right, you really haven't messed it up, as long as you do one thing. Or actually, just as long as you do one of two things. Either pay your premium or pay yourself back, right? And the most important thing is to pay your policy premium. Pay yourself. Pay yourself. Anytime I say pay your policy premium, all you're doing is paying yourself. Is it okay to pay yourself? Are you worth $2.50 an hour? $2.50 an hour is $100 a week. It's $400 a month. It's $5,000 a year. Are you willing to pay yourself $2.50 an hour? Oh, no, that's too much? Okay, what about $1.25 an hour? Can you pay yourself $1.25 an hour, which is $50 a week? $1.25 times 40, it's $50 a week. $200 a month. $2,500 a year. Is that okay? Can you pay yourself $1.25 an hour? If you don't think you're worth $1.25 an hour, nobody else thinks you're worth $1.25 an hour.
You got to treat yourself as your number one asset. That's why even like on my Excel sheet, sometimes I'll use it. Like when I'm talking to folks over the phone, people don't even track their expenses. They know how much they're bringing in as income, but they're not tracking their expenses. And more importantly too, even when they do show up at my front door and they got debt, and that's what we're working on first is the bad consumer debt, I send them my Excel sheet, and on there underneath the expenses is pay myself first. So it gets them thinking to start to pay themselves first and really truly treat themselves again as their number one asset, because you are. And I would even say this, because I think you're going to find it within your relationship to get on the same page with money, even if it's somebody who is a spender and somebody who is more saver, conservative mentality. I had an ex-boyfriend that he would give me his money. He goes, that part of my brain just doesn't work. I try, but it's just not working for me, and I just, it's not my strong suit. So instead, I'm gonna give you my money. I'm paying myself first by giving you my money, and you're holding on to it. And that's what I would do. I would hold on to their money, and I would keep it, so I would force them to save. And I think you will find a way to navigate this, because you gotta be on the same page with your spouse. It's almost like your spiritual or religious beliefs. You got to get on the same page with your spouse, or honestly, it's just not really going to work. Would you agree?
Well, yes. I mean, it can work without getting on the same page with your spouse. You know, it could be a rough go at it, but I think if your spouse just just give them 3 months or 6 months to do it and show them what you're doing. And even if they aren't willing to get on the call with you, when you're talking to your implementation specialist, or they're not walking through it with you, record your calls with your implementation specialist and then go through it with your spouse later, or show her or him in a spreadsheet what exactly that you're doing. I mean, even if you use this just to get the money back for the coffee that you drink, if you spend right, so like if you spend $100 a month or even $50 a month on coffee, are you willing to pay yourself first and then go buy your coffee?
Hopefully.
I mean, right? Just for coffee drinkers out there, you know, or if you go out to eat once a week, and if you're spending $100 a month on food to go out to eat once a week, are you willing to take that one little item that you have? Are you willing to just say, hey, you know what? I'm going to recapture and recycle all of my money for the coffee that I drink. Or for if I go out to eat, you know, at work once or twice a week. I'm going to start by just recapturing that money alone. And then you get to the next bigger item. Now maybe it's your light bill every month. Now maybe it's your car payment. You know, now maybe it's your house payment. And then so now I want to buy a new TV. I want to buy a new couch, a new desk, you know, whatever it is. A lawnmower. You want to buy a new lawnmower. Whatever it is, you got to spend the money anyway, right? Either you're going to spend the money anyway. You're either going to pay cash, bank finance it, or lease it. Or, you know, go put it on a credit card. You're going to buy it anyway. The money is going to leave your family and go to someone else. If you take the money and you go to lunch and you just pay for your lunch at the restaurant, or you buy your coffee at Starbucks and just hand them over the money, or go to Lowe's or Home Depot and buy the lawnmower, or go to the place you buy TVs, Costco or whatever, Sam's Club or Walmart to buy your TV, you're giving them the money and they're giving you the product or service that you're buying, are they not? So the money's gone. The money's gone. What if we just add this one step and put the money there first, and just take one extra step to do this? And now not only do you have the TV, the lawnmower, the lunch, the coffee, the couch, whatever you're buying, but now you get the money too.
And also it is important, I think, to get on the page with your spouse, because at some point somebody's going to pass away. Both of y'all aren't going to die on the same date.
Chances are no.
And I've had conversations with people in the past where it was their husband, or it was the wife who was the money manager in the relationship.
And everyone had no clue.
And they have no clue. They have no clue. And they're freaking out because they're like, I don't know how to do this. They were the one who was paying all the bills. They were the ones who were managing the policies and the assets that we have. And I just don't know what to do, and I don't know where to start. And that can get a little scary. And let me say it for females, my females out there, you don't want somebody else to be in your life to say what you can and cannot do with your money. I think it is important to get on the same page.
Yeah. Oh, yeah, definitely. I mean, even if you're not doing infinite banking, you guys should at least know what's going on in your financial life. You know, both spouses should know what's going on, because if the other one does pass away, you know, first, you know, then, yeah, how are they going to know what's going on?
How often do you and mom sit down? Because I've said it a few times on the podcast show of, what I do is the first Wednesday of every month, I have 9 to noon blocked out in my calendar, and that's where I go in and I look over my bank statements, my other statements that I have, updating my net worth sheet. And obviously I'm a single girl, I'm just doing that myself. How often are you and mom sitting down and looking over your financials?
Yeah, as far as us sitting down, not enough. But here's what we do. Like, I'll go through and I'll do it. I'll put all the numbers on the spreadsheet, you know, like you said, and I do it like, you know, monthly usually. I do it once a month, maybe every 2 months, you know, but every day I look at it.
Yeah.
I look at it daily, but I'm actually going in and doing a deep dive, and I'm kind of calculating net worth to see if it went up or down, and if it, you know, has gone up, which I'm hoping it goes up all the time. Usually it goes up all the time. There has been some times that it went down, and I'm like, well, why did it go down? And I might go and look and say, oh, well, that's because last month I paid this huge tax bill.
Yeah.
Or maybe last month I did a big, huge project to the house or something, right? A big, really expensive project. Or you bought something, you know, big and out of the ordinary that you normally, you know, don't buy. So, and then the thing I'll do is I'll get all of my numbers and I'll report them back to mom. So mom knows if I pass away, mom knows everything that we have, and like as far as the value of everything and where it's all structured, because it's all down, it's all written down, it's all documented. Now, I'll admit, if I pass away and she has to go and, you know, take care of this stuff, she's going to be a little weak at it, but at least she knows where it's at, and she knows where we're at and what we have. And then if something does happen, you know, then basically she just has to kind of step in and take over.
Yeah.
But it is important that you both, you know, just have an idea and not pass away, or something, God forbid, happen unexpectedly, and, you know, the other person doesn't have a clue of what's going on.
Yeah. And what would your thoughts be on somebody who they don't know where to start, I guess, and maybe they're looking at this like it's a chore, and I really don't want to do this. It's almost like me looking at the dishwasher, me looking at my laundry. I'm just like, oh, I can put it off for just one more day. I don't know, this is actually something I picked up from Sadie. Sadie said this not too long ago, and she's like, you know, I'm kind of done stressing and looking at things like they're a chore. I'm here to have fun, and this is going to be fun. I'm going to see where I'm at. It's going to be a fun exercise for me. And when I'm walking into stuff that I really don't want to do, I'm like, hey, I'm here to have fun. This is going to be fun. Let's get into it. What would be your advice for somebody just to start where they're at right now?
Yeah, well, the first thing I would think about is, how could it possibly be a chore if I know that I'm going to put my money in something that's going to grow? Right? That should be fun automatically, because it's going to grow. You're going to put your money in something, and you know for sure, 100% without a doubt, it's going to grow.
And it's not going anywhere.
Because it's guaranteed. It's guaranteed to grow.
You still have access.
Yeah, it's guaranteed to grow, and you have access to your money, right? So, but anyway, I would say yes, because it's procrastination. People put it off, and they're like, I'll start later. Well, just remember, the longer you start, the more that you're costing your family, yourself and your family, because the policies get better with time.
Yeah.
Today's better than yesterday, tomorrow's better than today. That's not me telling you, that is in the contract itself, that is in the policy contract. So every day you wait is one day less you have on this earth or this planet or wherever you think you're going. It's one day less, right? It's one day less that you have. So it's not that you're waiting just to start and you're going to start later and you're still going to have a lot of days. That's fine, but it's less days that you have. So by waiting, you are only harming yourself of that growth that you're going to get in the policy. Because remember I said the policy continues to grow and it gets better and better and better and better and better. Well, if you wait, you're not going to ever get to those better days. Yeah, you'll get to later days, but you could have even gotten to more days that are more later and more time. So I would just say, don't even think about it. All you have to do is say, you know what, I'm going to do this. I'm going to put in $500 a month into this thing, or $10,000 a year, whatever the number is, and you just decide and you say, Hannah, handle it for me, or whoever is on your team, whoever that you're getting to handle it for you, like on our team, whether it's Hannah, whether it's Larry, whether it's Jerome, whatever, say, this is what I want to do. Just tell me where to put the money. Okay, and our team will tell you exactly what to do. They will tell you exactly what to do. So don't think you got to do a bunch of work.
I think you made a good word choice there. You decided that this is what I'm going to do. You made a decision, and this is what my mentor says. You got to pick the horse, and you're going to ride the horse. I think a lot of the times when we're talking about our money, you will get caught up in all of these different avenues or all of these different products of what you could be doing, but what should you be doing? Pick the horse and continue to ride the horse. And once you master that one, then let's expand and let's now go dabble in something else. I think a lot of people like to be what's that one quote? Jack of all trades, but a master of none.
Right, exactly. Guys, don't overcomplicate this. It's just it's almost as simple as you go into your phone to deposit your paycheck. You know, open up the app, make the deposit. That's it. That's all you got to do is worry about making the deposit, and then whenever you want to just take the loan and utilize it, all you got to do is say, "Hey, Larry, I want to take a loan. Hey, Jerome, I want to take a loan." It's that simple.
Yeah.
It's really stupid simple. It's the most simplest thing ever. You make a phone call, and you don't even have to make the phone call. The team will make that phone call for you.
Yeah. And you don't got to be identical with your partner on money, in my opinion. Y'all don't got to be identical, but I think this system allows y'all to have a shared framework to be on the same page, to feel like you guys are working at this goal together, and then you can dream bigger. You can go and do the vacations or buy the houses, buy the experiences that y'all do want to buy, because now you're on this shared mindset and map going towards the correct direction together.
Well, and then too, I mean, it's not going to hurt your marriage or the relationship.
No.
It's only going to improve it, because if your wealth is building, isn't that going to be better for your relationship?
It would be.
I mean, a huge cause of divorce is what?
Money.
Money. I mean,
well, and even death.
Yeah.
I got this quote from Brent Kesler. Y'all ready? This is from the chiropractic days, getting into being a money mentor. He would say, the number one cause of death is heart disease. The number one cause of heart disease is stress. And what's the number one cause of stress?
Money.
Money problems.
So if we're solving your money problems, we're actually helping you live longer.
And
right?
your marriage.
And your marriage. And you're having better relationships, right?
Yeah.
So, yeah, it's only going to make your marriage better when your money is growing. Even if you're not both on the same page right now with this, whenever you see those statements and you see your money is growing, you're like, hey, look what I did. I put $1 in here and this is what it gave me. And then I put $1 in here and this is what it gave me. And look, honey, it's going up. It keeps going up. It keeps going up. Why does it keep going up? It never goes down. It keeps going up. Why does it keep going up? Because it's contractually obligated to go up.
Yeah. And I wouldn't get so deep into the numbers. If your spouse is that person where they're not, they don't love numbers, they're not a big numbers nerd, look at the concept, look at the value that it's bringing as the solid foundation to the family, to your marriage, to your financial future and situation. And once they really get on board with the conceptual idea of it, then you can go deeper into the numbers if that's where they want to go. The conversation I just had before we sat down and started recording is I asked them, I said, hey, are y'all number nerds? You guys don't really like to look at the numbers. They said, we don't really like to look at the numbers if we're being honest, but I know we got to probably dig into some numbers, and we will, but then it allows me to give them material that's not so number focused, where if you were to ask like my mama wants to see all the numbers and, well, how does this work, and does 1 + 1 actually equal 2 right here?
Yeah.
So you got to also understand like the different learning styles. But what is there anything else before we close it out today?
Yeah, just anyway, look, don't let the nickel hide the dime. Don't trip over don't pick over dollars to pick up the pennies, right? Keep it simple. It's really, really simple. Just start small. If you're very uncomfortable with it, start as small as possible. And if you're too uncomfortable with it and you're going to lose sleep at night, then don't even do it.
Yeah.
Just don't even do it. Just say, you know what? There's no way. It's going to drive me crazy. It's going to give me a heart attack because I can't stand to see my money grow. It's not going to work for me because I'm used to losing money occasionally,
or I'm
and
just
I don't
not
want to see my
disciplined
money
enough.
grow. So just start really simple. Start as simple as possible. It's not complicated, and don't overthink it, and use your team. Use the people on the team, to help you. And also what's really good is if you go out and you listen to some testimonials and success stories from so many of the people that we work with. Yeah. There's no way all those people can be lying to you.
Yeah.
All those success stories, all those testimonials that you hear, they can't possibly all be lying to you. Maybe a couple are, but they all aren't lying to you.
Then why do people keep coming back and starting more and more and more?
Exactly.
There's a guy just last week, remember? He's starting his 6th policy now.
Probably the biggest thing too is because even after they turn off this podcast and they go back for the next 4, 5, 6 hours or 6, or either 4, 5, 6 hours, 6 days, 6 weeks, 6 months, guess what's going to happen? All that normal crap, that traditional stuff is going to set back in. And you're going to be talking to your friends and your family and your coworkers and your colleagues. You're going to be saying, that whole life insurance, that stuff isn't any good. That stuff isn't any good. That whole life insurance, Dave Ramsey, Caesar Armanetto, they say it's not any good. You should be doing what I'm doing. And don't take advice from your broke-ass brother-in-law. Do not take advice from your broke-ass brother-in-law. No, you do your own due diligence, right? So don't listen to all the noise that's out there. Just go for it, and keep it simple. Just keep it super, super stupid simple.
That's it. All right, and hey, if you want to have a conversation with myself, send me an email. Hannah, spelled the same ways, forwards and backwards. Hannah@themoneymultiplier.com. Dad, you also mentioned about keeping things in cash. I've mentioned briefly about your book, Mapping Out the Millionaire Mystery. Send me an email. I'll send you a copy of our ebook. And sorry, camera. And you can see where Dad has even gone through in his childhood of losing dollars from keeping it on cash. Okay, that's a very interesting story within your book. So reach out to me if you want a copy of the ebook there. And I know as this episode airs, I'm going to be headed out to Atlanta. So coming up next month, August 15th, I'm going to be in Atlanta, Georgia. Come and hang out if you want to be at that event. It's going to be a good event. It's a group of chiropractors, and it's not just for the chiros. It's really just how to build and scale a business. It's really, really elite people who's going to be in that circle. So I even have my chiro who's coming out from Daytona Beach, Florida. I say, come on, let's go. We're going up to this workshop together, because even with him, he's a great, great chiropractor, but man, he sucks as a business owner.
Yeah, but remember, it's not just for chiropractors. It's just there's a lot of chiropractors
There is,
that will
yeah.
be there.
Yep. And just business owners,
but
really.
there's all kind of business owners that'll be there.
Yeah. So reach out to me if you want to come and see me in person. I'd love to take y'all out for a meal or grab y'all a cup of coffee. We can sit down and just have one-on-one conversations. But get on the same page with you and your spouse, your partner, and just talk about this stuff. Don't make money such a taboo subject, because hey, we got to buy things. We got to buy things in life. You got to pay your bills. You have to buy the grocery bill. You got to put gasoline within your car. So let's just talk about the big elephant in the room, and how are we financing for these purchases?
Yeah, because you're going to buy it anyway.
You're going to buy it anyway.
You're going to buy it anyway. The money is going to go anyway, right? The money is going to go anyway. Why not have your money go to where it really doesn't go?
Yeah.
It stays in your family.
Yeah.
You're recycling and recapturing those dollars.
That's it. All right. Well, I hope y'all enjoyed this casual podcast today. I'm going to be back home in the studio by next week. And we got to go have some fun. Let's go play now.
Okay. See you guys.
Bye. If you really enjoyed this episode, you'll really like this one.